What is active management in Section 2032A? Have you ever wondered how family farms or businesses can be valued differently for estate tax purposes? Well, that's where active management under Section 2032A comes into play. This section is part of the Internal Revenue Code and offers a way to reduce the estate tax burden on certain properties. But what does active management really mean? Active management refers to the involvement in making key decisions for a farm or business that qualifies for special use valuation. It is not just about handling daily tasks. Instead, it involves making significant choices that affect the overall management and production of the business. To qualify for the benefits of Section 2032A, the decedent or a family member must materially participate in the business. This means they need to be actively involved, usually on a full-time or near full-time basis. Generally, this is defined as working 35 hours or more each week. However, if the work is seasonal, that can also be considered as long as all necessary functions are performed during those busy periods. It is important to note that passive activities do not count as active management. For example, simply collecting rents or reviewing financial reports without making decisions does not meet the requirement. If the participant is self-employed in the business, their income must be earned income subject to self-employment tax. This shows that they are materially participating. If they do not pay self-employment tax, it usually indicates a lack of participation unless proven otherwise. When it comes to family involvement, each participant's activities are evaluated separately. However, at least one family member must be continuously involved, except for brief interruptions of 30 days or less. These short breaks are overlooked if they are surrounded by longer periods of active participation. Another requirement is that the property must have been actively managed and used in the qualified business for at least 5 of the 8 years before the decedent's death. This ensures that the business has a history of active management. From the perspective of estate planning, understanding active management in Section 2032A is essential. It directly impacts the ability to reduce estate tax liability on family-owned farms or businesses. By meeting the active management and material participation requirements, families can preserve their legacy and financial stability. Estate planning attorneys play a key role in documenting and verifying the involvement of the decedent and heirs in the business management. This includes keeping records of hours worked, decisions made, and income earned. These documents help support the election of Section 2032A special use valuation. In summary, active management in Section 2032A is about showing genuine involvement in managing a family business or farm. This can lead to favorable estate tax treatment, making it a vital aspect of estate planning for many families.